Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Wednesday 12th of March. I'm recording the video now, almost 4:20, or just gone 4:20 p.m. Eastern Standard Time on the 12th. We were expecting downwards movement. The short-term target was 1856, price reached down to 1854.38. There's now a clear channel breach of the pink channel on the daily chart, and so I have confidence now that we have had a trend change at minor degree. I'm expecting overall more downwards movement. Let's have a look at the charts. The short-term target is 1839 now for downwards movement, which should be met maybe in a few days. The bigger picture for the S&P sees a new bull market began at 666.79 for a cycle degree fifth wave, and within that cycle degree fifth wave, primary waves 1 and 2 were complete. Within primary 3, intermediate wave 1 is over here, and intermediate wave 2 is continuing as an expanded flat correction. Subdividing 3, 3, we need a complete 5 down now. We have a full candlestick now below and not touching the lower edge of this pink channel, which is drawn using Elliott's technique for a correction around this upward zigzag of minor B. So we have trend channel confirmation that we have had a trend change up here. Minor wave A lasted 14 days or sessions. Minor wave B lasted a Fibonacci 21 days or sessions. I'll expect minor wave C to have a reasonably similar duration, and so it should last about 3 weeks or so. I expect it's likely to end at the lower of these two aqua blue trend lines. There are clear instructions every day in the text article on exactly how to draw these trend lines. The upper of this double trend line showed where minor A found support. The lower of this long held trend line should be where minor wave C finds strong support. Minor wave C has to subdivide either as an impulse or an ending diagonal. Those are the only two possible structures. Let's look at the start of it here. This point here. The first wave down subdivides perfectly as a leading expanding diagonal. The trend lines all work, and it's followed by a typically deep second wave correction. This is a double zigzag. Minuet wave 3 can't be over here because the following upwards movement has moved back into minuet wave 1 price territory. So minuet wave 3 is extending even further. This is just wave 1 and an incomplete second wave within minuet wave 3. Which means that when the little second wave is complete, the following downwards movement will be a third wave at sub-minuet degree within a third wave at minuet degree. So we should be seeing an increase in downwards momentum over the next couple of days or so. The target for minuet wave 3 was already reached. Here, if it had been over, it would have been 1.618, the length of the first wave, but it's going to be further extended. So the next Fibonacci ratio in the sequence is used. At 1839, minuet wave 3 would reach 2.618, the length of minuet wave 1. When sub-minuet wave 3 is complete, we can start to draw a channel around this downwards movement. I can't quite do that yet, so I'm going to use this aqua blue trend line at the upper edge to show where upwards movement should find resistance if it got that high. It probably won't get that high though. Sub-minuet wave 2 is close to completion, but it's not done. It should move price a little bit higher. It can't move beyond the start of 1 above 1882.35. Overall, at this stage, the trend remains down at minor degree, and it should remain down for probably another couple of weeks or so yet. At the daily chart, this is the bearish wave count, which expects that the correction was not over at 666.79. That may have been only where cycle wave A of a huge correction began. The correction would be an expanded flat, and upwards movement would be a zigzag for a cycle degree B wave, which is incomplete. It would be getting closer to completion. It's within the C wave of the zigzag. Primary wave C will reach 1.618, the length of primary A, at 2190. Within primary C, intermediate 3 would be over here, and we'd be expecting a 335 expanded flat correction for an intermediate degree fourth wave. So there is no divergence with the bearish and bullish wave counts at this stage, and there won't be any divergence for several months yet. They expect exactly the same movement next. That's all from me today with your S&P analysis, and I hope that all our members are having a most fabulous day.